Next up, the biggest South African business, Famous Brands, which owns Steers, Wimpy, Debonairs, Mugg Bean and Tashas. It has a market cap of 10.4 billion rand, a PE ratio of 24.54 and a dividend yield. Well, actually they suspended that dividend, so that's at 0. So Taste came out with an update last week, I think it was, and the share price dropped 10%. Looked horrible.
Yeah, Famous Brands. So what happened was, really the Achilles, or what has been the recent Achilles heel has been that acquisition in the UK of GBK, Gourmet Burger Company. So that has dragged them down significantly. What was a profitable business when they bought it subsequently has unfortunately become a loss-making business. So, and they geared up. It was their biggest acquisition ever, in fact, at about 2.1 billion rand, and is now making losses. So that's hurt the earnings significantly, and as we've seen, the share price as well.
I mean, they've always inherently been very well behaved, very lazy balance sheet, no debt whatsoever. Now they've made this massive acquisition. Normally when you make an acquisition like that, you expect it to be at least earnings accretive. It's making a loss.
Yes.
Is this have they bought a dud? Is it Brexit, or do you think they're going to be able to turn this business around?
So what traditionally management have been really good at is buying these local brands that's really South African when they were fairly nascent or established, but putting them into their network. They've got a whole supply chain where they provide the services and food into their network and growing that way. This was, in terms of the GBC acquisition, it was a sort of step out of their comfort zone. Two things, obviously a new market being the UK, which we know about Brexit, and then also their corporate-owned stores, which is quite different to the franchise model. So I think they did get their timing wrong in terms of Brexit. Maybe they underestimated at first the risk and then the impact that it's had on the consumer in the UK. But I think it's a bit more broad-based. The UK consumer is quite indebted, is quite overstretched. The whole sector's got quite competitive. In the UK, it's much more overtraded, this gourmet burger market, than in South Africa. So I think, they just maybe overstretched here and using debt, and they're feeling the consequences.
What's an amazing case study is how well Shake Shack have done in the US, and you couldn't think of a more competitive market than making burgers in the US, yet they've managed to grow a phenomenal business. So if you do get something different, you offer something different that people will jump to, you can be successful. So it's going to be a hard job for them. Hot or not on Famous Brands, is this a buying opportunity?
Yeah, look, I think they're going to feel some pain. They indicated this was H1. It's still going to be loss-making GBC for H2 for this financial year. So they've got their work cut out. We know that the local environment is also tough. We haven't really spoken about that, but we mentioned it overall. So I'm going to say I think it can move down from here, still not hot.
Okay, you're not going to be hot. I'm going to back management here to be able to turn that GBC business around. History shows that they're very good at what they do. So let's give them a little bit more time with that and see how that goes. But let's remain hot on Famous Brands.